Good evening, everybody. My name is Dina Soumusallam. I'm a board member of Arar. I would like to welcome you all and welcome our special guest tonight, Dr. Rainier from Caracas, Venezuela. The moderator of tonight's discussion is Wissam Yafi. Wissam is an economic development practitioner, citizens' rights activist, author, and also a board member of Arar. Many people ask, what is next for Lebanon? Is Lebanon the Venezuela of the Middle East? From the good old days when Venezuela was the richest state in Latin America and Lebanon was the Switzerland of the Middle East, things have changed drastically. Venezuela is now a byword for political, economic, and humanitarian collapse. And most recently, we can compare Lebanon to Venezuela, maybe even call it Libazuela. Lebanon presents increasing evidence of characteristics of fragile or failing states, such as a weak, corrupt governance, limited administrative capacity, chronic humanitarian problems, and persistent social tensions. Also, economically, the Lebanese GDP is declining, unemployment is rising, hyperinflation is persisting, and humanitarian disaster is present as poverty exceeds more than half of the population. Tonight, Dr. Rainier will explain what has happened in Venezuela and how certain factors led them to where they are. This could also help us determine where Lebanon stands, and maybe we can learn from Venezuelan disaster before it advances more on our grounds in Lebanon. Thank you. Wissam, the floor is yours.
Thank you, Dina, and welcome everybody to this session. My name is Wissam Yafi, and I would like to welcome all of you to the webinar, which is part of the Lebanon Citizen Bill of Rights series. We're honored today to be hosting Dr. Rainier Schliesser, all the way from Caracas in Venezuela, a place that I visited many times and has wonderful people, and is a beautiful place of the part of the world, really. Rainier, thank you so much for joining us. For those of you who may not know, Rainier is a dear friend of mine and colleague back from the college days. We went together, we attended Harvard for several years and learned under some pretty impressive economic thinkers like Jeffrey Sachs and Danny Roderick. Although I must say that taking into account the current state of our two countries, I think one would reach the conclusion that we may have missed a few key lessons. Upon graduation, Rainier went back to Caracas and gained deep experience at the Venezuelan Central Bank, later the Inter-American Development Bank, the BID, and of course currently with the CAF, the Andean Development Corporation. Throughout the process, Rainier has been living in Venezuela and seeing firsthand all the reasons and implications of the policies that have been employed. Therefore, we should consider it all quite an opportunity to learn from Rainier and Venezuela's experience. Or what in a recent conversation that we had, a private conversation, he mentioned, Wissam, I feel like we are watching a Netflix series and on economic deterioration, and I'm on season 4 and you guys are still on season 2. So today's session is trying to figure out what could lie ahead in season 4 and what, if anything, can be done about it. Unlike many other sessions that we've had, this is not necessarily a prescriptive session, but rather one that explains the dynamics at play and that may cause certain outcomes and how certain societies have or try to cope with them, and more importantly, why, and which factors may facilitate or prevent certain solutions. Both Rainier and I are fully aware that not everybody here is an economist, and things in economics can get pretty technical. For this reason, we'll give it an extra effort to make things fairly understandable. But if anything isn't, you will have a chance to ask within Zoom by raising your hand, your digital hand. And of course, there will be a point at the end of the, in a few minutes for all the Q&A. In terms of the outline of the webinar, it will be split in 3 parts. The first, it will be a background summary by Rainier of where things are in Venezuela and how they got there. The second part of the session will be a set of questions that I will be posing as a moderator. And then finally, it will be opened up for Q&A by everybody in the audience. As mentioned, Rainier is currently in Caracas, which, not unlike Lebanon, suffers from chronic electric and internet outages. So hopefully we will not see those interruptions in today's session, but ask for your kind patience if we are called to manage such a situation. Finally, this session is being recorded, and it will be conducted in English to accommodate Rainier, who does not speak Arabic. But if there's anyone who prefers to pose a question in Arabic, إذا حدا بحب يطرح سؤال بالعربي, we will be happy to translate back and forth. Rainier, without further ado, welcome, and the floor is yours.
Hi, it is a big pleasure to be today here and share with all of you a story that is so close to me. And it has been already a significant and very nice surprise to see that there are so many of you that have links to Venezuela in a way that goes beyond what this experience might teach or be of use to the Lebanon reality. I also want to thank Wissam. As he said, we are friends from a long time, and when he said that, asked me to be part of this presentation today, I was very happy to say yes, because I think there are some important lessons that can be shared, and for Lebanon, it might be of some use to understand what the dynamics in Venezuela was. The presentation, the introduction Wissam made of me, makes me now have to say that, yes, I was at the central bank, but before the hyperinflation, I left before the hyperinflation started. So I'm not to be called responsible for any of it. I just wanted to make sure. So I guess I'm going to now share the presentation, and please let me know if you can see it.
Vale, yeah, we can see it.
Excellent. Is it in presentation form?
No, it's not yet in presentation mode. Yeah, now it is. Jaista.
Okay. Well, it is a little bit of a cautionary tale for all who wants to listen, and hopefully it will be of some use. The plan of the presentation is very simple. I will try to keep myself to the 15 minutes I have been given. And what I want to share with you is, I want to explain where is the situation now in Venezuela, what is going on and what has been going on for the last few years. Then after describing the situation, I want to try to explain how did we get there? Because I think the most important thing is the dynamics that got us there. What kind of lessons can be extracted from that situation, and what lies in the future after having such experience? After that, as Wissam said, there will be opportunities for questions and answers, and I think that is going to be the richest part of the session today, because the experiences might be several things in common, and we can extract some information and learnings from that. So where are we now? The first thing I want to convey is that we have been in a contraction for 7 straight years. Venezuela, GDP in Venezuela now is only 1/4 of what it used to be in 2013. So this has been a very dramatic economic contraction that has taken place in a very short time. Venezuela, as you said before, both Dina and Wissam, was one of the richest countries in the region for a long time. And now our GDP per capita is similar to the GDP per capita in countries like Honduras, Guatemala, and even below what the level is in Bolivia. So that makes us one of the poorest countries in the region at this moment. So it's a huge reversal of fortune that we have seen in the last 7 years. If you see the graph in the right part of the presentation, you can see that we have had 7 consecutive years of negative growth, and the magnitude of the collapse has been enormous. In 2020, the economy, we don't have official data. That's another thing I want to tell you. A lot of this data, it's not official because the authorities in Venezuela are not in the business of sharing information very often. But we estimate that there was a contraction of around 24% of GDP in 2020, and that after a contraction of 30% in 2019. So this is 2 digits contractions for 5 years in a row. And when you compound it, we are left with a GDP that is less than a quarter than it used to be just 7 years ago. We are expecting in this year 2021 a small recovery, and this is of course because we are comparing ourselves to such a low base in 2020. We expect that if there is some improvement in general terms regarding the pandemic, the economy will be able to bounce back a little bit, nothing spectacular, maybe 3%, 3 to 4% in the year, but still compared with the contraction we have seen so far, it will be just a small correction. The other fact that characterizes the situation in Venezuela is that we are living very deep hyperinflation. And actually, what is more important is that this is the third, so far, because we are still counting, this is the third longest hyperinflation in world history. It has been going on for more than 3 years. It started in September 2017, when for the first time inflation rates went over 50% a month, and it then went through a very acute phase for a little bit over a year, and by the beginnings of 2019, the inflation rate was close to 200% a month. At that point, the government decided to take some measures, and the result, some monetary measures, reducing the amount of money printing to finance fiscal deficits. And with that, inflation went down, and it has been a little bit lower. On average, it has been around 30% for the last 2 years, 30% a month. But still very high. In 2020, we closed the year with an inflation rate of over close to 3,000% during the year. Of course, it was much lower than what we saw in 2018, when we finished over 1,000,000% inflation in that year. As this acceleration of prices took place, people started to get rid of the domestic currency. As you can see in the graph on the left, the money demand, which is the orange line, virtually collapsed. That means that people try to avoid as much as possible to have any local currency, the Bolivar, and instead try to use the dollar or any other foreign currency that would keep its value. First, this happened first for savings, but then it started to take part in transactions. First, big transactions like real estate or durables, and then regular day-to-day transactions. As you see on your right, the degree of dollarization in the economy has been growing up steadily. And now the last measure we have by a private consulting firm, Ecoanalytica, for September of last year, it had already been at the level above 70%. And even though we call it dollarization, it is not only dollars that we are using in Venezuela. It depends on when you are. Of course, in Caracas, dollars are the most used currencies, also, but also euros and even Bitcoin. It's used for online transactions. But geographically, when in the border in border states with Colombia, the Colombian peso is used. In the south, in the border with Brazil, the real is used. Even in the south, where there is an expanding gold mining operation, informal gold mining operation, the gold is used as a currency, and of course, barter is also used everywhere. So this is a story of a total collapse of the use of the domestic currency, and it has been substituted by any other instrument that can be used to facilitate exchange. This is what we are calling for simplification, dollarization, but I just want to convey the idea this is a phenomenon that is much more complex than just the substitution of a currency by another one. The other very interesting feature is that as hyperinflation has run its course and has been made present for more than 3 years now, it has become less and less relevant, even as it is more widespread. Why is that? Because now prices are set in dollars, people transact in dollars, and the Bolivar is more a reference than anything. So hyperinflation it's now less of an issue than what it was in the public discourse and in the past. Of course, I don't want to downplay this because 3 million of public employees and 4 million of pensioners are paid in Bolivares. And of course, they suffer the brutal contraction of power, of capacity of power of purchase of the domestic currency every day. The third issue I want to talk about is the default situation in which the country faces itself right now. At the moment, fiscal income, all sources of fiscal income have collapsed. Tax income has been reduced by several reasons, as you can see at your right. First, because the economy is now much more smaller than it used to be, but also because the economy has become very informal. And since it is informal and it is trading in dollars, it is very difficult for the government to levy taxes. But also, as you can see in the graph as well, the income coming from the central bank financing, the monetization of the deficit, has also run its course, and now it's of very little use for the government. And this is because people had started to use other currencies, and the government has lost this tax-based in order to generate income, because people don't want to keep the domestic currency at hand. And that explained in some way why the government decided to let it go a little bit with the strategy of monetizing deficits, because they were not getting enough results, and they were just paying the consequences in a very high inflation rate. Also, as you can see, as debt increased, as you can see on your left, as debt increased, mostly foreign debt at the beginning, the country lost access to international financing and stopped paying its foreign creditors. Interestingly, the debt to GDP has kept increasing after 2017, when Venezuela declared its default, but not because more debt accumulation, but because of the GDP collapse. So by now, debt to GDP is over 200%, and we are maybe now the developing country with the highest debt to GDP ratio in the world. Of course, it will have to be refinanced at some point, but at this moment it is impossible for several reasons. First of all, because there is no comprehensive macroeconomics strategy that would be sufficient to convince the creditors to exchange their bonds for new ones, but also because of sanctions from the US that would impede this process to go on.
Was the debt foreign?
Yes, as you can see in the graphic, most of the debt has always been foreign. In 2014 to 2015, it was 50-50, and this is a very important point, Wissam, thanks for bringing it back, because as you can see, the dark brown bar, it almost disappeared, but it didn't disappear because the Venezuelan government paid it, but because hyperinflation, it was completely wiped away because it was in bolívares. Of course, you cannot do the same with foreign debt, right? And that's why the government ended up without being able to pay because as the economy got smaller and oil production, we are going to see that after a while also went down, the country was impeded to make good of their foreign obligations. In this situation, the adjustment took place not only by defaulting on the bonds, but also and mostly thanks to a big contraction in imports. Imports were reduced almost by 80% in order to be in absence of any international access to international finance, and given the reduction in oil income, both because of lower oil prices, but also because of dwindling production. This 80% contraction in imports made even worse the situation for domestic consumption, because it added up to the contraction in GDP, resulting in a reduction in the availability of goods in the country. And it is a very significant part of the story. To put it in context, in 2012, 2013, we were importing close to $60 billion a year. Keep in mind that what we have there is only the 19 main trade partners, because we don't have official data from Venezuela, so we have to go to the trade partners to get the data, and that's why maybe it doesn't add up. But imports went down from close to $60 billion a year to around $8 billion a year, where where we are now. So all in all, this the combination of a smaller GDP, of a dwindling capacity to produce, rampant hyperinflation, and reduction in imports affected the population dramatically in what has been called, and now it's recognized as a complex humanitarian emergency in the country. We are witnessing a situation in which private consumption has gone down by close to 80% and on aggregate. Poverty rates, extreme poverty rates are now in the vicinity of 60%, and general poverty rates are north of 80%. This is a situation like we have never seen in Venezuela before. And in the background, we have to say that the society has become extremely unequal, because as we have 80% of the population that cannot satisfy the basic needs, we have a very small portion of the population that still has access to what is normal, at least what is normal in the rest of the region. And of course, there is a very small portion that has much more than what is normal anywhere in the world. So another very interesting and dramatic feature of the situation is that inequality has grown so incredibly in the last few years. In that regard, I wanted to talk a little bit about migration, because migration has become the only escape possible for many Venezuelans. As you might know, in the past, Venezuela was a country that was used to get migration from the rest of the world. I mentioned before that we have a very significant Lebanese community in the country. It's now smaller than it used to be, but because many have gone back or have gone to other places in the world. But it's not only Lebanese, it is people from other countries in the region and in Europe. And now we are seeing the reverse of it. Venezuela in 2015 had 30 million people, population, and as of now, 5.4 million people have left the country. This is about 18% of the population is already out, and the process continues. It has been slowed down by the pandemic, but it is still ongoing. Of course, let's say the good side of this is that the country is now getting remittances, but those remittances are relatively small considering the migrant population, because many Venezuelans are living for other countries that are middle income, not high income. The country that has received the most Venezuelans in the world is Colombia. The second one is Peru. So those are not rich countries either. So the remittances that Venezuelans abroad, especially in the rest of the Latin American region, can send back home are in that regard limited. And of course, it has come at a very steep price because for Venezuela, because the migrants are typically young people in working age, young people, and they are leaving the country, and the age distribution of the population that is remaining in Venezuela is becoming completely different to what it used to be. It used to be a predominantly young population, and now it looks like South Europe, or to make a comparison to the region, maybe to Uruguay, which is the oldest the country in the region with the oldest population. So all in all, we lost 30 years of our demographic window of opportunity. And for the recovery, this is going to be a very difficult task considering these demographic complications. I think I'm taking more time than I was intended to, but I'm trying to, I will try to speed up a little bit. How did we get there? I want to very quickly get rid of two popular but wrong explanations. One of it is that there was an oil bust that went wrong. Yes, we had, as you know, in the middle of the last decade, oil prices went down considerably, as you can see in the graph, in the bars, brown bars. But this is not the first time that we saw something like this. It was very similar in proportion to what we saw in the 80s. And in the 80s, we did not have a contraction of GDP as we saw now. So our own history does not guarantee, or cannot, this explanation cannot account for what we saw. And also, there are other countries that, of course, suffered the same shock without the same results. Neighboring Colombia, for example, saw a small reduction in growth rates as oil prices went down. And other neighboring countries like Trinidad and Tobago, that is much more dependent on energy than Colombia, is similar to the dependency in Venezuela, had a harder time, but it had a contraction of 20% in GDP, not a 75% of contraction. The other popular explanation is it is all about sanctions. And the short answer to that is no. Oil production started to go down way before sanctions took place. As you can see there, trade sanctions on oil started in January 2019, and secondary sanctions started even just 1 year ago. And we have been declining in terms of GDP for the last 7 years. Even oil GDP has been going down for at least 5 years. So it cannot be explained just by the sanctions. Of course, sanctions have played an important role in the last 2 years, but the story is much more than just sanctions. So let's get serious now about what the real explanation is. And the first element is a policy that crushed completely the private sector. What we have there is labor productivity in the manufacture sector. I chose this sector because this is the sector that is more formal and more subject to controls in the economy. As you can see there, you see a big reduction in labor productivity starting in 2006, and then a deep down contraction after 2013. And this is related, and you have a timeline there, to all the policy innovations, to call it some way, that took place and had to do with the freedoms of the private sector, price controls on who you could sell, controls of what kind of inputs you could buy, controls on exports and imports, and controls on on how you could contract labor as well. So there were controls almost in all possible spheres that had to do with production, limiting the capacities of firms to make their own decisions, and it quickly showed up in productivity for those firms, as you can see. And this predates by many years either sanctions or oil or the reduction in oil prices. The second element that I would like to emphasize as responsible for the collapse we have seen is macroeconomic populism. What you see in the graph there is the fiscal accounts. The the brown bar is income, and the orange bar is expenditure. And you can see after 2008 how they start to diverge in a period. Before that, even for the first years of the Chavez administration, there was some macroeconomic responsibility, and inflation, even though it wasn't in single digits, it kept at a relatively low levels, below 20% a year. But after that, as income started to go down with the reduction of oil prices, and also with the controls on access to dollars, trying to keep an exchange rate that was overvalued, the government lost important sources of income, but it decided to keep up with the trend to increase expenditure. That opened up a significant hole, a fiscal hole, that then went up to be filled first with international financing, both in terms of bonds and bilateral deals with China, mostly, but also some with Russia. And then when this was not possible anymore, around 2013, the decision was to start printing away money to deal with the situation. So this macroeconomic irresponsibility interacted with the control, very strongly with the controls over the private sector, because as inflation started to accelerate, price controls became more binding, and it became less attractive to the private sector to invest and operate in Venezuela. So I really think that the interaction of those two factors are behind the result we have seen so far. I want to finish this first part with trying to look into the futures and what the lessons for recovery are. I'm going to go very quickly on this because I want to go into the question and answers part of the session. The first lesson I want to stress is that the longest the crisis, the harder it is to come back. We are seeing it now. At the beginning, during the first 2 or 3 years of the crisis, we thought that the economy could bounce back to the pre-crisis level relatively quickly. But now, as we see, we have lost 20% of the, almost 20% of the population is out of the country, but it is close to 30% of the working age population. So this is not going to come back, at least in the short term. But also our physical capital stock has depreciated significant infrastructure, electricity, infrastructure in general. So it will be very hard to come back to levels even close to what we had before. The second lesson is that political gridlock is potentially very costly. We haven't gone a lot into the details of the political situation in Venezuela, and I don't think this is going to be the opportunity to do that, but I wanted to stress that point. In particular, even though if sanctions are not the responsible for the collapse we have seen, I can tell you that sanctions are going to be binding for the recovery. So, and sanctions are in some sense the result of the political gridlock we have seen in Venezuela in recent years. Regaining access to market and attracting capital, again, will take time and effort. This relates to the first point. My fourth point is specific to dollarization. For us as a consumers, as a private sector, dollarization feels like a bliss because it really helps with transactions. But from a policy point of view, economic policy point of view, it can and will quickly become a straitjacket for the economy. We are seeing it now in Ecuador. In some sense, we saw it in Greece with the crisis a decade ago. So the lesson there, and if you want, we can debate on this as well. If you can and while you can, you should try to avoid it. And then the last point I want to make is that the deregulation after a crisis, this is the phase we are living on right now because the government has finally accepted that it cannot deal with the economy without a deregulation process, might create very significant distributive challenges as we see now in Venezuela, because a very few powerful and connected groups are being able to profit significantly from the deregulation and access to public assets. So I guess I'm going to finish here and then give the floor back to Wissam for the interaction. Thank you.
Thanks, Rainier. It's very, very insightful and a very interesting presentation. Appreciate it very much. So for anybody who'd like to pose questions, please raise your hand through Zoom, and we will be happy to entertain that. And in terms of, so I will start by posing a few questions of my own to Rainier, and please just kind of raise your hand and you will be called upon in order. Okay, thank you very much. So let me, Rainier, let me start kind of, there's four areas of questions, I suppose, but on the macroeconomics, on the hyperinflation and currency, on trade, but also on the social manifestations of it. So I'll pose a question to you on each of these, and then we'll pass it on to some of the questions that are coming in from the audience. So let's start with the macro. You know, the Lebanese government is known to also be in a very serious fiscal deficit situation at the moment, and it's 50% of its spending traditionally has been on interest. And if I'm looking at some of the metrics here, it's pretty amazing to see that between 93 and 2020, if you take out interest payments on loans, we actually had a total fiscal surplus of about 27 billion in Lebanon. So it's bad, but it could have been a lot worse. But it does say that the interest alone is about $87 billion accumulated over this 27-year period, more or less. As we see ourselves in Lebanon now trying to come out of this, of this situation, from a macroeconomic policy, on the one hand, you highlighted that fiscally governments need to spend because their economic base has just fallen from the sky, so to speak. Now they have to spend a little bit more, but they don't have much of a tax base. There isn't much of FDI or foreign direct investment coming in. And the business activity internally is kind of dying down as well. So what options exist in this case or existed in the case of Venezuela that could be considered other than just outright printing money? Is it producing more oil, etc.? But in the case of Lebanon, obviously there is no oil to produce. So what kind of fiscal or macroeconomic policies could have been deployed to stem some of this tide?
Sure. In the case of Venezuela, we started, the first option that was used was financing the fiscal spending with foreign debt. And that wasn't bad in itself. The thing is that the situation quickly got out of hand because there was no oversight on the use of those resources, and the efficiency in the use of them was very low and can be discussed. Also, since Venezuela had oil income, always the tax pressure on the population was relatively low. and there was political forces against that worked against increasing taxes that could have made at least partially to cover the deficit instead of trying to finance it through the central bank. The other thing, it has to do more from the side of the spending than from the side of the income. In the case of Venezuela, and I think in Lebanon is similar, there were a lot of subsidies to public services, and these public services and even some goods, for example, gasoline. And those subsidies, as inflation accelerated and the prices of those services kept constant, those subsidies became bigger in real terms and as a proportion of GDP. So a big part of the deficit was not because income was small, as you can see in the graph. We had income above 30% of GDP, but the real problem was that spending kept growing up until it reached almost 50% of GDP, and this was mostly because of those subsidies to gasoline that at some point were worth close to 8 points of GDP, subsidies to electricity, water and sanitation, and public transportation, etc. So I think one of the important lessons is that as you try to, especially in an environment of high inflation, as you try to continue to subsidize public services, this consumes a bigger portion of your budget, and it forces you to make difficult decisions. Either try to finance it in a way that is going to fuel high inflation even more, or cut down on services that you really want to keep for the population, like health services, or education services, etc.
Thanks for that. So there's a social cost to this, obviously, so that would need to be taken into account. I do have a question also on the banking. In Lebanon, we currently have a banking crisis in addition to the macroeconomic crisis. How was the situation, or how did this hyperinflationary situation in Venezuela affect and the devaluation process of the bolivar affect the banking sector? And I'm not sure if it's exactly the same situation, but as far as I've researched, I don't think Venezuela had a banking crisis, whereas Lebanon in this case does have a bank crisis and does have some capital controls that are being imposed on depositors.
Yeah, this is very interesting. We didn't have a banking crisis, but we ended up with no banking system anyway. So the dynamics is different. The result might be the same. The thing in Venezuela is twofold. The difference between Venezuela and Lebanon are twofold, I think. One is that the financial system in Venezuela didn't have obligations in foreign currency. As I understand, it is the case in Lebanon. And on the second hand, we never had a liquidity problem in Venezuela because the central bank was ready to print more money all the time. So the banks were never short of domestic currency, and since they didn't have any obligation in foreign currency, they didn't run into a problem. However, as inflation went up, the people, as we discussed, started to get rid of the domestic currency and use the financial system less and less. They were saving in dollars, either in the US banking system or in cash, and they were not savings, long-term savings or instruments in the banking system. So the size of the banking system continuously got smaller. Now, even though the banking system, the GDP has gone down by a lot, the banking system is now less than 1% of GDP.
Wow. Well, in Lebanon, it was five times. In Lebanon, it got to a point where it was $250 billion deposits compared to $50 billion in GDP. So that was like the banking sector was 5 times. Of course, a lot of it was bloated with basically just interest on paper, on electronics, on paper, real.
We never had such a big banking system, but it used to be 60% of GDP. It was that's about the average for the Latin American region, and it went down to less than 1%. So it has gone to the point where one single Colombian bank could buy the whole Venezuelan banking system without any trouble. So it really is dramatic. And this is very important now for any potential recovery, because we have no way to get access to credit now. We don't have access to international credit because of the default, and we don't have a financial system either.
So the default, you mentioned that the default was on foreign debt. So was the foreign debt denominated in Bolivar as well? Because you mentioned that it was not denominated in any foreign currency.
The foreign debt was denominated in US dollars mostly, but it was public debt mostly. The banks didn't have any foreign debt. And the public didn't have debt either, the Venezuelan firms. The public actually had important deposits abroad, and they have been bringing a bit of those deposits to try to cushion a little bit of the fall in recent years. But the bank didn't have those obligations in foreign currency, and that is why they didn't get into trouble. As I think is the case in Lebanon.
Yeah, in Lebanon, I mean, the biggest holder of government debt is the banking sector. So it was almost like a vicious cycle where once the government defaulted, then all of the banking sector itself fell, and this what became called the Ponzi scheme was essentially uncovered by everybody. I do have a couple of questions, but I wanted to give a chance for somebody in the crowd, Ibrahim Johari, to pose a question, and then I'll come back to one that has to do with, with the trade and some interesting metrics, but also the social manifestations that to me seem so tragic. So, Ibrahim, can you please go ahead, unmute yourself, and pose your question?
Hi, how are you? My question. First, how much do you know about the Lebanese crisis now? I just want to try to make a comparison between the two.
Well, pose your question, Ibrahim, and then maybe that way you can
answer. So my idea is, I'm trying to see what's going to happen in Lebanon economically. So what I'm trying to do is to see how far ahead is Venezuela and its crisis, so we can extrapolate from that what is going to happen in the next few months or the next year in Lebanon. So,
yeah, I heard you for free today. Guidelines say only people on the priority list should be back.
Yes, thank you for muting, guys. So I guess we can pose the question, Rainier, in the following way, which is, clearly Venezuela is ahead of Lebanon right now, and we can't kind of pin it down to the month because there are some variables between, economic variables and social and political variables between the case of Venezuela and Lebanon. But we can pose the question in such a way where the constant deterioration that you've seen, the length that you highlighted, which is almost a lost decade, and some people in Lebanon are talking about a lost decade, but also the precipitous nature of the fall, because you mentioned that, some elements of the fall started in 2008, and perhaps even more so on the microeconomic level with some of the controls over business, etc. But then in 2008, some manifestations started occurring, but certain policies, the social policies, increasing with the price of oil all the way to 2014, And once the 2013, 2014 crash happened in oil prices, that kind of uncovered a lot of these things that might have been covered by the price of oil just by throwing money at the issues. From 2014 to 2020, there's been, you mentioned, three or multiple bouts. How precipitous was this? Did it happen overnight? How did the government try to, hide it from the people, or did they try to hide it from the people? And how did it eventually manifest itself on the streets, like from an economic perspective? Could you give us a little bit of insight for those 6 years between 2014 and 2020, and how precipitous it was, or was it a step, kind of more of a function?
Sure. First, what I want to say is that for as long, and this was a case in Venezuela, and I think is very relevant for any other country that is going through the same process, and probably for Lebanon. While there was access to foreign financing, either because of sufficient exports, or because of access to credit, or because the government and the country had savings abroad, the situation was, the government was able to keep the situation relatively stable. It is no, it is very telling that the collapse that started in 2013-14 started at that point. In 2013, China, that was the big creditor to Venezuela in the last few years, decided not to continue lending to Venezuela. In 2014, oil prices went down significantly. So two sources of foreign financing came short at the same time, and the government was unable to deal with it effectively, and had to start printing out money significantly at the moment. And this is one very important issue. And the second one is that once the population start to lose confidence in the local currency, it very quickly unravels. It is not a process that takes place evenly, but it lasts for a while, because confidence is something that is built for a long time, and people are used to use the local currency. But then once this confidence is lost, everything unravels really quickly. So we had, even though we had this very bad situation in 2015 and 16, with the economy going down at a very quick pace, and we have shortages of all kinds of goods in the country, inflation didn't pick up that significantly. But later on, in 2017, when the government defaulted, and it was very clear for the people that the government did not have any other sources of financing, inflation went up really quickly, and hyperinflation developed. So I think those are two things to look for. One is whether the country continues to have access to some sort of international financing, either because it has a healthy source of exports or remittances. In the case of Lebanon, might be relevant, or because it has access to borrowing from abroad, or because it has savings abroad that can be used. So this is the first item to look at. The other one is confidence in the currency.
Go ahead, sorry.
Once you start to have a very quickly depreciation, you can enter into trouble really quickly.
It's interesting that I was looking also at the situation of the reserves. So in Lebanon, really, there's been two sources of income. one local and one foreign. Our oil reserves between quote are really our expats who have, and estimates go in the past 25 years, repatriated somewhere between 200 and 250 billion dollars to the Lebanese economy, which is again 5 times the size of the GDP. And so the central bank had a sizable amount of foreign currency reserves. Now, you mentioned the opaque nature of data, and our central bank lately has been kind of quite opaque, and the numbers kind of gyrate upwards and downwards, confusing people. But in the case of Venezuela, in addition to foreign currency, I've been reading that the gold reserves were also tapped, where the foreign gold reserve, I mean, Venezuela is both the foreign held gold reserves and the gold reserves on the interior, because Venezuela produces gold, went down from about 20 billion to about 12 billion. Not sure if that's the latest metric, you might have more of that. Did that help essentially accelerate the deterioration of the fiat money, essentially where you're having money being not only being printed, but also any basis on which it stood, be it gold or any other form of basis, completely disappearing, as well as foreign funding? Do you think that helped also accelerate it, the gold reserves or the foreign reserve spending?
Well, actually, there are two answers to that question, Wissam. In one sense, it was good to have such a big proportion of foreign reserves in gold, because at the time the price of gold was increasing. So we had a situation in which reserves, even though the central bank was drawing down reserves to finance imports, that was partially offset by the increase in price of gold. So as it happened, it was a good strategy to have the gold there as an investment. But it was just a matter of luck in that sense, because it could easily have been the other way around. And on the other hand, later on, as Venezuela started to lose reserves quickly, having a big proportion of reserves in gold made it more difficult to make it liquid. And in some sense, it made more complicated to keep imports stable in time. And of course, with all with the sanctions that took place later, then these holdings of gold also backfired. Now, the Central Bank of Venezuela has significant deposits of gold in England, but it cannot access them because, as you know, the political situation, there are two boards of the central bank. As you know, there are also two governments.
And I heard that some of the assets of the government have also been adjudicated between different, like Citgo as a in the U.S. instead. There's a question coming. Yeah, there's a question coming in from Amir Rishani. Amir, could you please go ahead and pose your question?
Yes, hello. Thank you, Dr. Rainier, and thank you, Wissam, for this. I have just two quick questions. So there are many similarities between Lebanon and Venezuela, as you're saying, high migration, sanctions, markets, capital. But when it comes to differences, and the question is, in the case of Venezuela, we had restricted access to US dollars. Pretty much means that we couldn't go and buy US dollars as we wanted because of currency controls. In the case of Lebanon right now, the banking system is allowing the flow of fresh USD into the economy, which pretty much allows people to keep having access to US dollars. So the question, does this flow of fresh dollars into Lebanese accounts, could this cushion the inflation rate in Lebanon? And the second question, in the case of Venezuela, we're talking about a country with a lot of resources, and the case of Lebanon is not the same. How could we see a rebound in the economic, from the economic collapse of Lebanon, if we're thinking about an economy without the resources that the Venezuelan economy has? Thank you.
Thank you, Amir.
Yeah, it is true. Currency controls in Venezuela played a huge role in the situation in several ways. The first one is that through currency controls, the government was able to keep an exchange rate that was artificially low. And this was good for inflation at the beginning because it was used as an anchor. And it also was good for the distribution of goods among the population. So from a distributive point of view, it also have produced some gains, political gains for the government. But it was really a problem waiting to develop because, as we mentioned before, the currency controls, having an exchange rate that was artificially appreciated, eroded the income of the public sector because most of the income in the public sector, about half, came from oil income. So having to sell dollars at a subsidized price cut down the capacity of the buying power of the government, and it got us into this huge, at least partially, to this huge fiscal problem. So it had this advantage at the beginning, but at a price that was later much steeper. I don't remember right now the second question. I don't know if you can clarify.
It's about the rebound of an economic collapse from the perspective of a country like Lebanon that doesn't have enough natural resources.
You know, we don't have any resources anymore either. So outside of the joke, I think both in the case of Venezuela and Lebanon, any eventual recovery will require the participation of the international community, both the organized international community, but also investors. So I think it's going to be crucial to generate, in both cases, confidence in the stability of the economy in order to bring back investments. Because in economies where the government has played a role so important in the past, there is always the doubt whether the private sector will have the possibilities to compete and operate without the strong intervention. And this intervention might not be just heavy-handed, like we have seen in Venezuela, but also more nuanced intervention, like with control on public sector services, etc., that can distort the relative prices and affect the way the private sector can operate. So I think building confidence is a fundamental need in order to bring back resources that maybe the country in itself cannot provide for growing up in the future.
And an interesting note that I believe you mentioned to me a few days ago is that now Venezuela, which is known to have the largest proven oil reserves in the world, even more than Saudi, is actually importing gasoline because of the lack of refining capabilities, which is pretty stunning to even contemplate. I did want to kind of drill you a little bit more on the role of the international community. In the case of Lebanon, there's a lot of conversation around the IMF. And of course, some people in Lebanon, we don't have in Lebanon, the political system in Lebanon is a little bit much more complicated than a right-left kind of a split. In the case of, and yet in the case of the, any discussions on the IMF, the biggest fear for some of those in power and that have influence over the system is that the IMF is going to come in with very stringent conditions to provide aid, among which is clearly, floating the currency, making the public sector a lot smaller, imposing fiscal fiscal, governance mechanisms, and et cetera, fiscal controls. Are those the kind of concerns that people in Venezuela have had to deal with? What sort of relationship does Venezuela or has Venezuela had with the IMFs or the some of these multilateral organizations that might offer some aid?
Yeah, we don't have any relationship with the IMF since 2004. So I think that's the short answer to the question. Not at all. And the reason is ideological. Of course, there are some concerns about what an IMF program would mean for the country. But even more than that, there is some concern about what message politically could that kind of agreement send. But the interesting thing, and I thank you, Wissam, for this question, because it allows me to elaborate on what I'm going to say now, is that after the situation we have been dealing with, the government has been forced to operate in conditions that are much harsher than any condition that the IMF would have imposed on any government in Venezuela. Now, public spending in Venezuela that used to be close to 50% a decade ago, 50% of GDP, is now down to 8%. So we have a government that spends nothing because it has no access to financing. So no IMF plan would ask for such a huge reduction in spending. And on the other hand, we for all practical purposes, all the social safety nets programs in Venezuela has been dismantled. Even minimum wage that was always relevant in Venezuela is now less than $1 a month. So there is no minimum wage in Venezuela. This is, if you want to characterize it, you could say it is like a neoliberal paradise in terms of the access of the absence of any kind of restrictions for contracting labor, etc. So the government is now in a situation that makes them, not because of conviction, but because of the hardship the country is right now, in a situation of implementing measures that not even the more stringent IMF policies would have required the country to go.
Fascinating. It's almost as if the market conditions or dynamics themselves, led a more left-leaning policies to actually go further right than any, or be more stringent than any IMF program would have. Well, I want to talk about the social implications in just a minute, but I have a couple of questions here. The first one is from Mirna. Mirna, could you please unmute yourself and pose your question? Thank you.
Yes, hello. Thank you for this Zoom and this. It's very interesting. Now I have a question that might be a particular, but my question is it possible economically and with all the understanding that we have to extract a sort of ratio of corruption? Let me explain myself. It's simple. If Lebanon has a debt of $100 billion, okay? And from this $100 billion, in reality, 70% of it went to the corrupted regimes and corruption and everything else. And what really came and benefit somehow the Lebanese government people is 30 billion. So is it possible to advocate in the name of the Lebanese people that, yes, we do have foreign debt, but we only owe 30 billion and not 100 billion? Is it possible to I don't know, you see what I mean?
Yeah, and actually, I would add to Mirna's, some people have essentially termed this political money. and the effects of essentially this kind of like layer that sits on top of the actual value that's really being. And I think a recent study in Lebanon valued this, and they valued, I have the metric here, the total services paid by the people in the between 2003 and 2020 was $316 billion in total, with the total benefits being 116 billion, with the deficit being close to 200 billion. This one, according to Muwatinun and Muwatinat study that was just released in a book recently. So that was an interesting metric. Is there something similar in Rainier, in Venezuela that you've come across? Is there some kind of like ratio or something that can point to the amount of losses due to these inefficient, corrupt, call them what you want, programs deployed by the government?
Yes. Well, I want to answer the question in two ways. The first thing I would like to say is I think there is some background. Okay,
Yeah.
it's now corrected. The first thing that I want to say regarding this, whether the debt is legitimate or not, I think there is a very important parallelism with the case of Venezuela. In 2015, the opposition was able to get a supermajority in the elections of the National Assembly, and the government and the Supreme Court went on to not recognize the decisions of the National Assembly. At that point, the government was already facing difficulties and financially, and they went ahead with a bond exchange, and Goldman Sachs actually bought some of these bonds that were then called the hunger bonds. That was a name given by Ricardo Hausmann, and that caught on the discussion, because the rationale was that the government was paying an implicit interest rate of 42%, and causing hunger to the population in order to get a few more financing for Goldman Sachs at a very steep price. And the National Assembly at that point sent a letter to Goldman Sachs saying that they would not recognize in the future, if the opposition would become government, would not recognize that debt. No? So there is a discussion. This anecdote is to put into perspective that there is a legitimate discussion about whether that debt should be serviced in the future. But also, since access to international credit is a repeated game, there is just so much that you can press that argument, because you will need in the future international financing. So even if you are right that the debt is not legitimate, it might be very costly to try to press that strategy. At the end, we might be able to learn a little bit from the Argentinians, right? They default every time, and they are able to reach agreements with their creditors, and they get haircuts in their debts without pressing those kind of arguments. So this might be a more efficient way to deal with those situations. At the end, the situation in which Venezuela is, and probably Lebanon is a situation in which the country rationally won't be able to pay the totality of the debt without forcing the population into a very strong sacrifice. So the international community, creditors, etc., will need to accept that fact and take some haircut on the country's obligations. Just to go to your specific question, Wissam, yes, there was an estimation on what proportion of imports under currency controls were actually going into specific imports and not overpricing, not overpricing it just in order to get dollars at a subsidized rate. And at some point, close to the end of the currency controls, lax currency controls in 2013, 2014, close to 40% of all imports were considered to be overpriced just to get the dollar. So this is maybe the best proxy for corruption in the use of those kind of government subsidies that we have access to.
Right. I want to pose the question. I know we have a few minutes left. I want to try to get as many questions as possible. Alida Turbay, could you please unmute yourself and pose your question? Thank you.
Oh, yes. Thank you, Rainier. It was very clear and very, very good and really very good. Thank you. Thank you, Wissam, also. With the parallelism between the problem between Venezuela and Lebanon, I believe that the Lebanese debt, it's financed by the Lebanese people, because all the money of the Lebanese people are in the banking system. And this is what it's really the issue. Practically, we didn't have this problem in Venezuela. In Lebanon, it's the Lebanese people, they are financing the Lebanese debt, which is a very sad thing.
Yeah, and it's an indirect financing because by the banks, thank you, Alida, the banks essentially, the depositors put their money in the banks without any, preconceived notion or investment, contracts or anything of the sort that stated that these deposits are going to go towards government bonds, but the banks in and of themselves, who appear to be in the same bed as with those in the government, or at least forced by the government for whatever reason, ended up putting a huge amount of their capital into government debt. And by the government defaulting, it essentially collapsed the entire banking sector. So this is not quite the situation in Venezuela, is it, Rainier?
Yeah, absolutely. This is a very significant difference. And what I wanted to say about that is that there is a good thing and a bad thing about the situation. From a macroeconomic perspective, it's actually an advantage that the debt is domestic because the situation can be solved in a way without all the international ramifications and that a default entails. The bad thing, and of course, I completely understand where you are coming from, is that it has some very strong distributional impacts, because it's basically the government putting their hand into the population pockets and generating a redistribution that can make collapse the savings of the people for all the people develop during all their lives. So from a distribution point of view, it might be really bad, and I understand the situation. From a macro perspective, the stabilization can actually happen quicker than if it was foreign debt. So it's mixed. There are some very bad aspects of it, and some that are not so negative, of this difference between Lebanon and Venezuela.
With respect, you're dead right on this, and some people within Lebanon have called for some form of burden sharing between the depositors and between the central bank and the banking sector and between the government. But that's in such an politically polarized environment, it's not that easy to accomplish. But it is an internal, or for the most part internal, because there are Euro bonds that are externally held as well. But they're in the minority. I did want to, there's one more question, but before I get to that, I did want us to kind of touch a little bit on the social element. You mentioned that poverty in Venezuela has gone between 50% or excuse me 60% to 80% of the population. In Lebanon now, it's estimated that up to 50% have fallen into poverty. And of course, you mentioned social manifestations such as migration, etc. Could you help kind of describe to us, how sudden that fall into poverty occurred, and how even was it between the different cities within Venezuela? Was it even? Was it not even? And how did it manifest itself? Do you guys have power cuts? Did you guys have, I did see here one anecdote that shocked the heck out of me, which is on average in 2018, if I'm not mistaken, a person in Venezuela lost 11 kilos in weight just because of malnutrition. So can you share a little bit more about this? What manifestations Venezuela saw, just from the anecdotal to the social, statistical stuff like this? I think it's stunning, some of this stuff.
Yeah, it is a very, of course, it is a very sad story. But there are two main elements that you can mention about this very, very quick transition into a poverty situation. One was the complete, the loss of public services, and it happens very quickly. But it didn't happen very quickly, but for people to realize the situation, it was rather quick. The access to electricity, access to water, and sanitation started to deteriorate, and this, of course, had a big impact on the population. On the other hand, Venezuela had this program of subsidized food, and it worked through two different sources. One is that having the exchange rate subsidized and imports concentrated in food, food was relatively cheap. On the other part is that the government had a direct distribution of food, a program of direct distribution of food. As foreign income started to dry on, both mechanisms disappeared. For once, the government wasn't able to subsidize the exchange regime anymore, so food prices skyrocket. And on the other hand, the handouts of food also diminished significantly. And this all happened starting in 2015, 2016, and that was maybe the biggest manifestation of the situation. As per regional differences, this is a very telling, very interesting question. Because there were political forces at play, the government wanted to keep Caracas relatively insulated from the crisis. So even it is not, but very recently that we have in Caracas energy problems, for example, or gasoline, or shortages of gasoline, while in the rest of the country, that is something that has been going on for several years now. So even the distribution of food, the government centered on mostly in Caracas and other big metropolitan areas that could be politically destabilizing, while the big interior was left alone a long time ago. So in the interior of the country, we have a much bigger rate of poverty and deterioration. And it is interesting that we have seen internal migration as well in Venezuela. Many people from the countryside have been moving to Caracas, because in Caracas, at least there are some public services still functioning, while in the interior of the country there is not. And the other dynamic at play here is, again, migration. Populations living in close to the borders, particularly close to the Colombian border, in Táchira, Zulia, etc., have more access to buy goods from Colombia or to work temporarily in Colombia and bring some income to Venezuela. So in that sense, it has been, the crisis there has been partially cautioned by this option. Of course, this is not an option for the population in other regions. I think that's the main issue at play there.
Great. There are a couple of very quick questions, and then we'll call it a day, Rainier. One is, I have it here, it's how did the crisis affect the real estate market in Caracas, or excuse me, Venezuela in general, during the crisis? How has that, have people kind of taken and invested in real estate to protect their, against inflation, or what exactly has the real estate, how has the real estate market reacted?
This is a very interesting question, and to go into the detail would take a long time, but I will try to give the main elements. There was a policy of subsidizing interest rates in the banking system in Venezuela for many years. So this fueled demand for real estate. And as demand for real estate increased, the prices of real estate went up considerably for a long time. And this, together with real exchange appreciation, resulted up until 2013 in prices in real estate that were one of the highest in the region. In Caracas, in some premium areas, 1 square meter could cost north of $5,000 up until that point. In general, in the last few years, prices collapsed in real terms or in dollar terms, but it hasn't been homogeneous. And this is a very telling as well of the inequalities in Venezuela. High-end real estate has kept pretty much its price because there is a significant demand still in the country, but real estate in middle-class areas, the price of real estate in middle-class areas have all but collapsed. 80%, 90% down in prices. And this reflects expectations on the future, and also reflects change in income distribution in the country.
And the final question, thanks for that, Rainier. The final question is, what would you say to those who bet the future or the, let's call the economic bailout being based on, on oil, given that Lebanon discovered a massive, across, in the sea, we discovered some massive gas reserves, and a lot of people are pinning their hopes on gas, which I would assume Venezuela, with its experience of oil. What would you say to those who think that that's the solution if we just wait a few years down the road to be able to extract that?
Well, I would say several things. The first one is that oil, it will never be enough. True rich countries nowadays are not countries with oil, but are countries that can make their way into the service economy. So I think this is an important issue. However, I wouldn't go to the other extreme and say that oil is a curse. No, I don't think so. I think oil can help countries to develop their economies by making access to foreign currency easier, and in that way finance infrastructure and the development of other capabilities. However, the big caution there is, what does oil do to the political institutions in the country? Because oil can be toxic in that regard, since it is a big price that can make political groups focus on trying to obtain and keep power at all costs, and then affect political institutions and the good and the work of reasonable work, political functioning of a society. So that would be the caution I would try to emphasize.
And of course, oil and the typical lesson, not just within politics, but also within economics and business, is the famous Dutch disease syndrome, which basically crowds out other investments by just focusing on one hydrocarbon sector or another.
Absolutely, Wissam.
Yeah, Rainier, I wanted to thank you so much for your time. We tried to go through all the questions. If we missed on any questions, please send it through to us via the messenger or via Dina, via the email that you sent the invitation. I believe it was Dina's, and we will be happy to answer that. Rainier, thanks so much again for sharing this experience. This is indeed
it has been a pleasure.
Very, very valuable, to see. And we pray for Venezuela to overcome its troubles in season 6, if not season 5. And hopefully we'll be able to jump to season 5 as well, shorter than going through season 2, 3, 4. Thank you so much, Dina. I'll leave it with you.
Thank you so much, Rainier, and thank you, Wissam, for giving us this opportunity to host Rainier. It was excellent. Thank you for all those who attended, and hopefully we'll see you soon. We'll add to our prayers tonight Venezuela, Lebanon and Venezuela. May God help those countries in need. And that's it for tonight. Thank you.
Thank you all.
Thank you all.
Thank you all.
Thank you.
Thank you all.
Thank you.
Thank you.
Excuse me, just a quick question. Where will the recording be found?
On YouTube, Ana Al Qarar YouTube channel.
Can you